What's going on, guys? Welcome back to my YouTube channel. In this video, I'm going to be going over how I use multi-time frame analysis with trend in order to increase my win percentage. So this video is definitely going to help you out, get you the basics of trend, and also help you understand how I use different time frames in my trading. So let's go ahead and dive right into it. So right here, I have a blank chart up. What I'm going to do is go over the basics of trend. Now, obviously, the way trend works is very, very simple. This is a very clear uptrend. And the reason for that is we have higher highs and higher lows, right? So if I click here, go to settings, we have our higher high here. We also have a higher high here and a higher high here. Now, if we go down here, we also have a higher low and another higher low right here. So obviously, when we're making higher highs and higher lows, that's going to indicate that we are in a uptrend. It's pretty simple, very easy. Let's move on to the downtrend, right? Downtrend also very simple, right? If we're making lower highs and lower lows, that's going to indicate a downtrend, right? So here you can see we're making lower highs, just like that. And here we're making lower lows as well, just like that. Oops, just like that. There we go. Okay. We have our lower lows, we have our lower highs, and very, very simple stuff. Okay, you need to get the basics down before we get into the time frame analysis because it is going to get a little bit complex. So now that we have this situation here, very simple, uptrend, higher highs, higher lows, downtrend, lower highs, lower lows. Now we get into a situation where we see something like this. Price is in a uptrend, but then we start seeing another downtrend form within the uptrend, something like this. Right, so within each downtrend of the higher time frame uptrend, we see a miniature downtrend, right? So here we have, again, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. However, this is in a higher time frame uptrend, right? So here would be our higher low, here would be our higher high, and then this would be our higher low again as well. So you can see that this is where it can get a lot of confusing for a lot of different traders because they don't get that time frame analysis in. And so what happens is a lot of time they may think they see this, oh, I'm in a downtrend, I'm going to look to short right here, and then it goes down a little bit, and then they end up getting stopped up because we're in a higher time frame uptrend, okay? So this is a very key point that I want to get you guys to understand is that you need to go with the higher time frame context. This is what you do in order to increase your win percentage. You always go with higher time frame. So now you can scalp on the smaller time frames in the opposing trend, although that may decrease your win percentage. So let me give you another example here, right? Let's say price is in a huge downtrend here, and then we start to see an uptrend, and then that ends up being another low for a downtrend, right? So you can see here that in this case, although we're making an uptrend on the higher time frame, yes, you can scalp these levels. You can wait for pullback, buy here, sell here, buy here, sell here. However, understanding that, in the longer time frame, we're in a downtrend, that's when you want to really go with the higher time frame trend. And what I mean by that is you only want to be looking for shorts in this scenario. So when do we look for shorts, right? If we're making higher highs and higher lows in this shorter time frame, then when do I want to be looking for shorts? And the answer to that is when we start changing time frame on the smaller time frame. When we start changing trend on the smaller time frame, right? So let me show you another example here, right? We have our uptrend, smaller time frame downtrend. We have our uptrend, smaller time frame downtrend, right? Now, at what point do we want to look to get long, right? Because we're in a higher time frame uptrend, so we know we want to be looking for longs. We don't want to be short. But when do we look for longs, right? That's when you start to see that's when you start to see a bullish trend on the smaller time frame form. When you start to see those higher highs, higher lows form on the smaller time frame, that's when you want to be getting in long, right here, right at this moment here, right? Now, why? Why that specific moment? Because that's when we see something called a change in trend, right? We finally break this high here, make that a different color. We break this high and we make our first higher high. Now that we have our first higher high, we know, okay, trend is starting to change. We don't necessarily want to be short anymore. Again, higher time frame context is long, right? We're in a uptrend. This could be the low of our new higher time frame trend. We don't know for sure until we start changing trend on the smaller time frame. Okay, guys, so smaller time frame always changes first. Okay, you're always going to see the smaller time frame trend change first before you see the higher time frame come into play. And that's how you know you can get in once you start seeing the higher highs, higher lows, once the smaller time frame matches the higher time frame. Okay, now I'm going to show you a few different examples here. So let's go ahead and look at CCL. Get rid of some of these drawings here. So you can see CCL in the long time frame, we're in a downtrend, right? We're going up, now we're downtrend for the past few years. We come down, we start seeing higher highs, higher lows, right? So we have this high here, we break it, boom, higher high here. We make a low, we break it, higher high here. We make a low, we break it, higher high here. So in this scenario, we want to be looking for longs only. Now there are obviously going to be times in here where we can look for shorts, right? Here, we see a small downtrend, we start seeing lower lows and lower highs. But you don't want to get short in that scenario because of the higher time frame context, right? Yes, there are certain demand zones, supply zones like right here, but they end up breaking because we finally get that higher time frame context. The higher time frame low is made right here. And then we see that this high gets broken, right? We make a low, we break that high, and now we see that price is finally starting to make a higher highs, and we make the higher low, and now we see the higher high of the higher time frame context, right? So if we zoom out a little more, we can see price now finally ends up breaking this low, right? We're making higher highs, higher low, higher high, higher low. We come here, we stop hunt, so we take stops above here, we immediately reverse, we come down, we break this low. Once you see that low break, now you know, okay, there is a change of trend occurring. This low breaks, we now have a new high here, we now have a new low. So now we have the start of a downtrend. So at this point, you want to be looking for shorts, right? So if we look, we have higher highs, higher lows. You may be thinking, well, I want to get long. I want to be buying this pullback here. You buy it, and then you end up getting stopped out here. The reason for that is because we have a change in trend, right? We have this high is able to take out this low here. Now we know the sellers are in control because the sellers were able to take out this previous low. We have the lows getting taken out, new highs getting formed here that are lower than the previous highs. That is a downtrend. And that's exactly what we see happen. Price low, we make a lower high, we come back down, make a lower low, move up again, make a lower high, break it again. And you see here, again, we have another mini uptrend in the higher time frame downtrend, right? So we have this move up here, this move up here, this move up here, this move up here, and then we finally get that move lower. Now you may be thinking, well, my plan was to get long in this demand zone here and, target up here or target this high here, right? So what happens is you get long here, targeting up here, and then you end up getting stopped out. And you're wondering, like, why did that happen? We're in a uptrend. I'm buying demand that took out this high this demand should hold, right? But the reality is in the higher time frame, we're in a downtrend, right? We're making lower lows, lower highs. So at this point, you want to be looking for shorts, and you want to wait until you finally see that break in demand to look for shorts, right? So once we start seeing this higher low, the lower high and the lower low, now we can start looking for shorts. Now in this case, we never got to pull back for an entry, but if we did, you can bet I would be looking to get in short there, stop above this high at 2054, and then looking for a move a lot lower, targeting this low here, and then possibly this low down here. Let me take you on to another example of Etsy. So, looking at Etsy, again, right here, you can see very clear uptrend. Very, very clear uptrend. Higher highs, higher lows, higher highs, higher lows. You can see this high gets broken, this high gets broken, this high gets broken. Very clear uptrend. Now, in the meantime, we have a downtrend, right? We have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you may be thinking, okay, I see a beautiful supply zone right here, right? We get this fast drop, nice gap right here. I'm going to look to get short at the supply zone. And you're thinking, well, I got stopped out. Why did I get stopped out? The reason is, again, higher time frame context. We're in a uptrend, right? we never broke this low here. We actually held demand here, right? This low is the key low that we have. Because this is the high we made a low, and we broke this high using this low here. So until this low is broken, I'm not going to want to be short, right? I'm only want to be looking for longs. So here, if we count out our lower highs, excuse me, let me zoom in here. Zoom out a little bit. If I scroll down over here, we go on a higher time frame. Just like this. So you can see this right here. This high here is the last high that we have. We make a low, we make a high here, right? We fail to make a lower low. That's our first sign that an uptrend is starting. We fail to make a lower low here, and then we end up breaking this high, right? This high should have held, but it broke. So now we know, okay, shorter time frame, we're starting to see a change in trend, right? Before we were seeing, lower low, lower high, lower low, lower high, lower low, lower high. We don't see a lower low, and then we see a higher high. That's the first sign of the higher high we get in this trade. And then once we see that, we can start to say, okay, we're in a higher time frame uptrend. We're bouncing off demand. We never broke this low here, right? We broke this high on the smaller time frame. We broke our miniature downtrend, and now we're starting to see signs of an uptrend with this higher high here. Once you see that, then you say, okay, I'm going to wait for a pullback because this low should now hold. So now we're expecting this low to hold because it was able to break this high here. So we wait for a pullback. Then we can get long right here on this pullback, put the stop right below that low, and target the opposing high of the higher time frame. This is how you get insane risk-reward trades. This is also how you get a much better win percentage. When you're going with the higher time frame trend, you're always going to see an increase in win percentage because you know that's the higher time frame trend. Higher time frame always works. It's always in control. Yes, you can scalp some shorter term, smaller time frame supply zones here, make a little bit of money. But again, if you're shorting based off this high here, maybe on a supply zone here, it would have not worked out because we're in higher time frame demand. So I hope this video helped you out, guys. It really comes down to just understanding the overall trend on different time frames, using multiple time frame analysis to help you understand who's in control. Is it buyers or is it sellers, and in what context and what time frame? And if you always go with the higher time frame context, you're going to end up with a much better win percentage. So hope you guys enjoyed this video. Please leave a like and subscribe if you haven't. Also comment down below what other videos I should make, and I will go ahead and make them for you. So that being said, guys, hope you have a good rest of your day, and I'll see you all in the next video.